All right, what's good? It's Lex. So today's video is going to be a little bit different. So essentially, I'm going to be going over what a liquidity sweep is. So the reasoning why I haven't made educational videos yet, I'm starting it out now, is because I wanted to have a couple videos just so people could see how I trade. So obviously, if you're relatively new to trading, a lot of those videos probably didn't make much sense to you because again, you're new. But if you know what the confluences are and you kind of heard them, you can kind of put one and two together a little bit more. So again, I just did that in the sense of people seeing how I trade, how I use the confluences, everything like that. Just so people, basically, just so people could observe and see how I do it, what I use, you know. So now I'm going to be hopping into essentially showing what they are, why I use them, and how I use them. So today's video is going to be based upon a liquidity sweep, which to me in the beginning when I first started out was probably the most confusing confluence for me, because essentially this is where you're taking your trade off of. This is where you start this is where you start looking for entries after you find the liquidity sweep. And I'm going to go ahead and explain in depth why you want to wait for a liquidity sweep, how it's validated, how it's invalidated. I can't emphasize this enough. I probably watched over fucking 50 videos on what a liquidity sweep. It never made fucking sense to me. So I'm going to try to make this as simple and straightforward straight to the fucking point as much as I possibly can. And obviously, if you have any questions or anything like that, just comment down below. Maybe I'll make a second video on this, but I'm gonna try to cover it fully on this video. So yeah, tune the fuck in. We're gonna go ahead and explain what it is, why it happens, how. All right, so I have it written down. So screenshot it, take a fucking picture of it, do whatever you gotta do. This is essentially my explanation on it. So what is the liquidity sweep? Liquidity sweeps happen or reveal when big money is active in marquee turning points or continuations in price action. That's what it is, right? So depending if the sweep is validated or not by a break or a sweep. So this is where we start hopping into a break of structure, which validates the liquidity sweep, which my next video is gonna be what a break of structure is. But for now, just focus on what a sweep is. I won't hop much into detail on how it's validated. I'll just show what it looks like, how it happens, etc. So essentially, they are price points where orders get filled again due to price filling orders there in the past. So price retraces to fill orders once again and have a reaction, which is where the word sweep comes in. So what does that mean? Price essentially just retraces back into the same price points, fills more orders, has a reaction off of it. That's the way to simple that out for you. This is where you find entries if the sweep is validated or not. This is the fake out, right? I'm gonna go ahead, show you why. Without sweeps and manipulation moves in the market will not function due to price action being so clear to everyone. So why does this need to happen? Because if price action didn't have manipulation, didn't have shit, people would just enter long, become fucking millionaires overnight, right? You need fake outs. It just psychological. It makes sense why it needs to fucking happen, right? Again, like I just mentioned, if you were to fucking price action was so clear and the same shit happened every single time market closes a certain way, everybody would catch on to that. Everybody would enter long, everybody would enter short. Everybody would be rich as fuck by this point. Obviously, they don't fucking want that, right? So, all right. So why? Helps identify market structure shifts. So this is where the sweep happens. So typically it happens with accumulation, manipulation, and then distribution, I believe. I don't know, I saw a picture of that shit, but it makes sense. But sweeps often occur before or at breaks of structure by sweeping high or low, then getting a break of structure, confirming that market structure wants to shift. So we use them to confirm whether a move is a true breakout or just a stop loss sweep, which is sweeping a high or a low and finding entries off of it. This fake out creates opportunities for us to recognize it. So how does this create opportunity? Because if the sweep is validated, it means you found the price point where price wants to shift. Once you start finding that, depending if your sweep is to take out a high or a low, once price action changes in your direction, take profits or hits. Simple as that. And you target other rest in liquidity. Why? Because price traces back to liquidity, right? Fills more orders, has reactions, yada yada yada, right? So hopefully that made fucking sense again. And then this pretty much is me explaining. I'm gonna start showing this shit on the chart, but yeah, take a picture of that. Do as whatever you got to do with that shit, but this is the fucking sauce. Like, I can't, like, this is what it is. This is what fucking sauce right here. Can't fucking emphasize that enough. I'll leave it up there for like another 10 seconds, but I'm gonna hop on the charts now. So yeah, like, so first off, we gotta go over what the fuck a high even is and what a low even is. So all right, so what is a high? So my chart looks a little bit different than probably the basic standard one. It's normally green and red, but essentially my blue candles mean red and my white candles mean green. So there you go. So what is a high, right? A high is a move up, then a move down. So it's a 2 candle pattern, right? So a high, move up and then to move down. So this would be the high. So you pick the highest wick between the two. All right. So in contrary, what is a low? It's a move down and then a move up. Again, 2 consecutive candles, right? So in this example, it would be this, right? Which one is, where would the low be? Right here. Why? Even though this is a move up, because this wick lower than this one. Again, you're picking the lowest wick or the highest wick, depending if it's a high or low, between the two. Doesn't matter if the candle is green. Doesn't matter. It's a 2 candle pattern. There you go. That's what a high and that's what a low is. Right. So liquidity sweeps, all of the confluences that I use are applicable to every single time frame, which is why I fucking love it. So essentially, here's an example on the daily time frame. Again, I haven't explained what a break of structure is, but essentially I'm just gonna say something really quick upon what it is. Again, it's gonna be in my next video. But what a break is it's essentially when a body, so this is the body, so it's essentially when the body closes below a low or closes above a high. It's either a break of structure to the upside or to the downside, right? So what is a sweep? It's a wick. It means that it's wicking it, right? We're not breaking it. Why? Because the body of the candle did not close below the low or the high, depending on what you're looking at. In this scenario, we're going to go ahead and show the low. So what is a low again? It's a move down, then a move up, 2 consecutive candles. Cool. Which one is a low? Which one's the lowest wick? Obviously this one between the two, right? So this would be the new low, right? Prior to that, this would be the low down here, but then we made a new one. So you're always looking for the most recent one, right? Or depending on what you're looking for. So in a sweep, it could be depending on which highs and which lows have been swept. So again, this is the low, right? We go ahead. What happens? We don't break it. We wick it, right? What happens right after? Price action reacts to the upside. So what does it mean when we sweep a low? It means that the manipulation move is down. So just kind of putting it together, when you see that manipulation move is wicking price action, showing that they're pretty much saying that it wants to go lower to everybody, but then it distributes to the upside. That is a manipulation move right there. So if you're sweeping a low, you're going to be looking for longs, right? Because if you read the liquidity sweep right, that is where price action is going to have a reaction. And as you could tell, this worked out perfectly, right? We went ahead, swept these lows, boom, had a reaction to the upside. Another perfect fucking example here. So boom, what is a high? It's a move down and then a move up. Which one is the highest, or where would the high be? Right here. What happens? We go ahead, we wick it, price reacts to the downside. Guys, it's that fucking simple. Again, I'm putting it in black and white for you guys just so it makes sense. Obviously, when you get into the markets, it's not that easy to see. But once you're able to figure that out and use the sweep and see the sweep, if it's validated, if it's invalidated, right? So in this scenario, if the body would have closed below this low right here, that would be a break of structure to the downside. So that would be invalidated. Why? Because it's showing that price action wants to move to the downside. Again, I haven't talked much about breaks, but just showing what a sweep is. So what is a sweep? We're pretty much wicking a high or a low and having a reaction in the contrary, right? So here, everybody probably thought, perfect example. I'm just go over the two. So here, so price action is moving lower, right? Everybody's like, oh, fuck, we're going to go down. A lot of people fucking probably entered here, got stopped the fuck out, right? So here, Here's a low, a move down, and then a move up. That's the new low. We broke below it. Why was that invalidated? Or why wasn't this a sweep? Because the body broke below this, showing that price action wanted to move lower. Guys, fucking perfectly to the T here. Like, this is exactly why we wait for a sweep, right? If I would have just fucking entered here, I would have gone stop the fuck right out if my position was to go long, right? So that's on the daily time. And again, I'm going to show you guys on different time frames, and we're just going to show what it looks like. Same shit up here. This is the high. Move up, and then it moved down. This would be the new high. We wick it. Boom. All right, so that's on the daily time frame. Now let's go ahead and go down into the 4-hour time frame. Let's see if we can find a sweep here. All right, so here's another example. Not a crazy move, but here's an example. Here's a fair value gap. It's so hard not to show all the confluences all together, guys, but I'm going to go ahead and make everything individual. So, all right. So we have a low here, right? We wick it, cool, right? Price reacts, cool. We make a new low to high. This is the low. Which one is the lowest wick between the two? Boom. We wick that. Reaction. Right? And again, I'm putting this in black and white for you guys just so you guys can kind of see how they're used. But let's see. Boom. Here. All right, so this is a high right here. High at a low. Which one is the highest between the two wicks? Right here. We go ahead. We sweep that. Have a reaction to the fucking downside. Right? So again, as I'm just kind of going through these very shortly, like, hopefully that makes sense. So we're wicking. I emphasize that on that. We are wicking a high or a low and having a reaction off of that, right? So price is manipulating it, showing everybody that it wants to push higher, but in reality, we're getting a manipulation move and straight up shitting the bed, right? Boom, here. Price action, it looks like it's in a downtrend. So what is a downtrend and what is an uptrend? So a downtrend is essentially lower lows and lower highs. What is an uptrend? Higher highs and lower highs, right? So obviously everybody obviously understands that, like, this would be an uptrend, blah, blah, blah. This would be a downtrend, right? So here's a low. This is on the far time frame, by the way. So low to high, we go ahead, we wick that. Everybody probably thought price wants to obviously push lower, and we did. Don't get me wrong, we did. But what happened after we wicked it, didn't break, and had a reaction to the upside, and then took out this resting liquidity up here, sweep this, had a manipulation move, and distribute it to the downside. Hopefully that's making sense to you guys. Let's go ahead and scale that into the 1 hour. All right. Boom. And again, I'm just showing random ass examples. I'm not showing when New York Stock Exchange opens. I'm not showing the London session, Asia. Like, I'm just going through black and white again. So this is on the 1 hour time frame. So now we switched it. We scaled even lower. I'm just going to keep scaling down even lower and lower and lower. All right. So here's a high. Why is this the most recent high? Because it's a high and then it's a move up and then a move down. Which one is the highest weight between the two? This one. Doesn't matter that it's a red candle. It's, again, guys, it's a high. A high and a low are made of two consecutive candles, and you pick the highest wick or the lowest wick between the two. Cool. So what happens here? We go ahead, we wick that. Boom. Reactions to the downside. Here, what happens? We have a low. Why is this a low? Because we had to move down, then a move up. Cool. We wick that. Reaction, right? Let's see. Let's look for another move. I'm gonna just try to find different examples. All right, here, guys. So we had to move down, then a move up. What happens? We wick that. We take out these lows. We do not break. The body of this candle does not break below this low. Okay, we wick that. Reactions to the upside. Here, a move down, a high. Why? Move up, then a move down, to consecutive candles. You pick the highest wick. Cool. We wick that. We also took out these highs up here. So we took two highs. What happens right after? We wick them, do not break above them, have a reaction to the downside. This was the manipulation move. Everybody probably thought that we were going to go higher. But what happened in reality, we wicked it, manipulation, distribution to the downside. Right? All right. And so now we're going to go ahead and scale down even lower. So let's go on the 15-minute time frame. All right, let's go somewhere fucking random. Okay. All right, let's see. And then, yeah, guys, once we start scaling down to lower time frames, that's where you got to be more observant on this. All right. Cool. All right. So here, what do we have? Let me go ahead and actually make that a little bit bigger. So here, what do we have? We have a high. Why is this a high? Move up, then a move down. Two candlestick pattern. This is the new high. Which one is the highest wick between the two? This one. Awesome. We go ahead, we wick that here. We wick that high here, and we also took out these highs. What happens right after that? We have a move to the downside. So what was the manipulation move? It was to convince everybody that we wanted to push higher, which looked like it did. And then what happened after? We wicked it, and then what happened? We had the move to the downside. Right? So now I'm gonna try to look for a low example. So, okay, guys, here and here. So this is a low, right? We haven't taken this out yet. Why? Because obviously price action hasn't came with it. We have price action hasn't came. Again, we're acting like none of this happened yet. So these are the lows that haven't been taken out yet. So this is why I say take profits are essentially you're putting them at rest in liquidity or building blocks overall in general. And I'm gonna go ahead and make another video based upon that. But cool. This is the low. Why? Move up or move down, then to move up. You pick the lowest wick between the two because it's a two candlestick pattern. Guys, I'm just gonna keep repeating that. Like, I want this shit to stick in your fucking head. Right? This is the low. Why is this a low? Please fucking tell me that you understand why this is a low here and why we would be looking for this to get swept, because price action again has not retraced back to them to take them out and have a reaction. So these are lows that have not been swept yet. Hopefully that makes sense. So cool. Two lows that, again, we don't know that this happens yet. Two lows that haven't been taken out yet. Cool. We go ahead. What do? We wick them. All right, these two. We wick them. Right? What happens after? Move to the upside. Here, we have a high. Move up, move down, pick the highest wick between the two candlestick pattern. This is the new high. We wick it. What happens? Move to the downside. All right, now we're gonna scale into the 5-minute. All right, I already found one. All right. So this is a high. Why is this a high? Green, or move up, then move down, pick the highest wick between the two because that's what a high is. It's a two candlestick pattern. A move up, then a move down is a high. In contrary, a move down, then a move up is a low, right? So this is the high. Move up, then a move down, pick the highest wick. Cool. This is the new high. What do? We wick that. What happens? People get stopped the fuck out because people probably thought we were going to continue to the upside, went long. What happened right after? We manipulated that and we moved to the downside. So we wicked this high up here and this high here too. This would be the most recent one if we were looking at it live in live price action. Move up, then move down, pick the highest wick between the two. Cool. We wick that. Manipulation move. Distribution to the downside. Now let's try to find a low. All right. Cool. So I'm going to go, I don't look for liquidity sweeps on the 1-minute time frame. I know a lot of obviously everybody trades different, but other people obviously like to do the 1 minute. I don't, because it's not a higher time frame. Like, I love high time frame confluences. So let's see. And again, I'm just showing in black and white what the sweeps look like. All right. All right, here you go. This is, yeah, okay. So this is the low, right? A move down, then a move up. Pick the lowest wick between the two. Awesome. We wicked it. What happened right after? Manipulated price, showing that it wanted to maybe continue down. Everybody probably went short, got stopped the fuck out because what happened right after? Shit ripped to the upside, right? So guys, why is the liquidity sweep so fucking important? It's super fucking important because this is where you're looking for the manipulation move. So this is where you start looking for your entries. Why? Because again, the manipulation move is here. So obviously if we entered here and we went short, we would have gone stopped out. So what are we looking for? This is the move that we're looking for here, right? So if we're bullish on the day, we're looking for lows to get swept. Why? Because that's a manipulation move. Everybody wants to continue down, but in reality, we're just sweeping a low and having a reaction to the upside, okay? And in contrary, if we're bearish on the day, right, we're looking for highs to get swept. Why? Because I'm just going to show an easy ass example. Because, all right, so let's say we're bearish on the day, right? Why do we want a high to get swept? Because that is the manipulation move, right? So this is the high. We wick that. What happens right after? Cool. This is the move we want. We would want to enter short here. Why? Look what happens right when we fucking sweep that. Boom. Okay. That's me explaining what a liquidity sweep is, examples, and then my next video is going to be what a break of structure is. So I'm going to be showing how that comes in confluence with the liquidity sweep, essentially a break of structure. I kind of said it a little bit in the video, but I just want you to see what a liquidity sweep looks like, and I showed you validated ones, right? Next video is going to be a break of structure, and I'm going to be going through how it, so I'm going to explain I'm just going to leave it there. I'm going to leave it there. This is going to be the video on liquidity sweeps, and then my next video is going to be what a break of structure is, and we're going to show kind of what they look like together once I explain what a break of structure is. All right, so hopefully that shit made sense. That is what a liquidity sweep looks like. That is how they work, right? This is where after we see that, because that is the manipulation move before the distribution, meaning the continuation to the upside or to the downside. That's where we would essentially start looking for entries, right? Hopefully that made sense. Hopefully I explained it. Again, I just showed black and white examples, what it looks like in the market. Now, next video, like I mentioned, is going to be on breaks of structure. So this is essentially what kind of invalidates the sweep, right? So that's what the next video is going to be on. What a break of structure is, what it looks like, why we use them, etc. Right? So hopefully that made sense. Again, any questions, anything that I kind of didn't go over, please don't hesitate. Fucking comment down below. I want to help as much as I possibly fucking can. So, and again, yeah, that's going to recap the fucking video. Hopefully that made sense on what a liquidity sweep is, why it happens, and why we use it, and what it looks like. Okay? So, again, comment down below, like, fucking comment, subscribe. There you go.